Okay, good day, guys. How we doing? It's been a while here, and like it has really been a while. But I want to teach us something today. I want us to talk about something called order flow. I learned this. I first heard of this from my mentor, and I had to work on his model, which he called order flow. I had to work on it for like 8 months before I could understand it. Then I had to work for another, I think, probably 3 months before I could coin my own model from it. And I tell you, this is my this model order flow. I love to call it order flow or top analysis or higher time frame bias. Those are the three things I like to call it. But this model of mine is a very unique model and is my weapon of warfare because whether it is an high impact news or medium impact news or where the market is consolidating, this model, if you read it correctly, it would work for you. Even if the news is FOMC or CPI or NFP, so far you read it right and you position yourself in, the news will always flow in the direction of the other flow. So I want to show us what I term the order flow. I want to explain it to us bit by bit and the way I go over it. But the first thing I would like to talk about is that I start my analysis from the higher time frame. I like to start from the one month time frame. Now you see what I mean. Now I only concern myself with just two things. I concern myself with liquidity, and we already know that this type of liquidity. We have the buy side liquidity and the sell side liquidity. And I concern myself with order block. And like we have two types of order block. We have the bullish order block and we have the bearish order block. So I start from the monthly time frame. I ask myself, what are the things that what can I see from this multi time because monthly time frame is an higher time frame compared to the weekly time frame. The weekly time frame is an higher time frame compared to the daily time frame. Daily time frame is an higher time frame compared to the 4 hour time frame. And the higher the time frame, the let me just put it like this: the lower time frame will flow in the direction of the higher time frame because the higher time frame is the parent time frame. Because when we were kids, if our father says sit there, we'll sit there because that's our parent. So a 1 week time frame will supersede anything the 4 hour time frame is saying. If the 1 week is saying we are going up, the daily will fall in line, the 4 hour will fall in line, the 1 hour will fall in line, the 15 minutes will fall in line. So imagine you got from your higher time frame, let's say the weekly time frame, now that okay, you are going to be bullish weekly time frame, and you were able to analyze this top down. That's why I call it top down analysis. Start from the higher time frame, narrowing it down to the lower time frame, and you're able to lower it down to your 15 minutes to get an entry. It will mean that any entry you get to buy will last for throughout the week. Imagine you place a trade on Monday and a TP following Monday. Do you know how much pips or how much points or how much profit you would have made? So that's why I really, really love this model. So let's go into it. So like I said, I start with my what? Multi-time frame. So let's go into multi-time frame. And my favorite here is Euro USD, you can see. And trust me, this thing I'm teaching you here, I traded it. Trust me, I don't teach something that I have not traded. I've been using this model for like since last year. So what I'm teaching here is not hindsight. No, I traded it. If you want proof, I can give it to you. And I have a lot of students that would testify that I really traded it. Now let's move into the main thing now. So this is the money time frame. And this is the current month we are trading. This is very currently the current month we are trading. And that is the month of what? June. Right? Now, before we enter the month of June, we had what? May. So immediately this May closes. Let me remove this. Immediately this month of May closes, I move to the month of June. I ask myself, where is the liquidity of the previous month? Now, what I mean by that is that we are already done with May, we are now in June. So immediately this June started, I will ask myself, okay, where are the high and the low of previous month? Now, the high and low of this previous month, which is the month of May, is the high of this candle. So I go and I mark it out. I'll mark the high of May, and I'll also mark the low of May. Very simple and straightforward. Very simple. But also, if you look to the left, if you keep looking to the left, you see that this blue candle here is a bearish order block. Yes, it's a bearish order block. Go and watch the video on order block that I've dropped on this channel and I've also dropped for us. This blue candle here is a bearish order block. And don't forget, if you are looking at bearish order block, we start from the open of the candle. So you look at it very well. The high of May and the beginning of this order block, they almost coincide perfectly. Do you understand? So the first thing I'll do is I will mark my PDRA on the monthly time frame, and I've marked it. You can either use previous month's high, or you can also use this monthly order block, bearish order block that we see. So on the monthly, what we have in our mind is okay, for this month of June, I should be expecting a bearish move. Simple. Now, we need all that on the monthly time frame. So I'll move to the next time frame, top down. The next time frame outside the monthly time frame, the 1 month time frame, is the weekly time frame. So I'll go again. This is how I trade. And this model, I've only taught one person. I've only taught one person, and that is one of my friends. So from the monthly, I come down to the weekly time frame. This model I don't really like to teach anyone, but it's time for you guys to learn it. So now, look at this horizontal line that we marked on the monthly time frame. It denoted previous month's high and also a bearish order block on the bearish order block on the monthly time frame. But you know, when we move into the weekly time frame, it will try to transpose what's on the monthly to the weekly time frame. And on the weekly time frame, the other block is this blue candle. You can see it's close to this blue candle. So this is it. Can you see? So you can see price came and tap the monthly order block that is now this on the weekly. And don't forget that this blue line also denotes monthly buy side liquidity. So price came, tapped into it, right? So we've confirmed that okay, will also be there. You know, as at this time, when we entered June, we did not have all of these two candles yet. So the only one we had, which went up, took out the monthly buy side liquidity and also into the bearish order block. So what we are expecting on the daily time frame is that okay, the monthly we will mark that our buy side liquidity and our bearish order block. You can use either of the two. You can either use the monthly buy side liquidity or the monthly bearish order block. So okay, price has taken out the buy side liquidity on the monthly, and it has also hit the monthly bearish order block. Okay, the weekly time frame has confirmed it. But what we need to see in the weekly time frame, we need to see in the weekly time frame break on market structure. So from the weekly time frame, I will move immediately to my daily time frame. This is how I trade. I use something called this model which I call stock analysis. So look at it now. Don't forget that this blue line denotes our monthly buy side liquidity, which is this candle here, and it also denotes our monthly order block. I hope you remember. Okay, so let me make it clear. So on the daily time frame, this is our previous month high that we marked on the monthly time frame first. But you know, as we keep coming down, the line will keep try to transpose itself, right? And on the daily time frame, this is the OB. Yes, this is the OB on the daily time frame. Don't forget we started our journey for the monthly time frame. But as we narrow it down, the horizontal line will try to shift, but you will still get the area in which those PD arrays are. You understand? Now, when price came and touched the price at the previous month's high, when it touches in this candle, right? This is the same thing I've been explaining, just that this is we're just trying to scale it up now. So when price came into it here, this swing low must not be broken, else we have to break a market structure, right? I know we are following me. So price tapped into this price and picture in daily time frame, right? Which is also bumped into a what? OB, a daily OB now. But don't forget you started marking this from the monthly time frame. When price tapped into it, price rejected and broke this swing low. This happened 2 weeks ago. I shared this. Like FX is very sweet when you understand what you're looking for. So it came down, broke this swing low. And it means that okay, we are now what? We are bearish now, right? We are bearish on Euro USD. What we see on the monthly time frame, which that bearishness we see on the monthly time frame has been confirmed on the daily time frame by this what break of structure here, by this sell side, this window being broken here. And don't forget that on the monthly time frame we marked the buy side, right, and the sell side. But don't forget the buy side got tagged first, right? So if market rejected that buy side liquidity, don't try and give us an entry. Where will our TP be? The monthly sell side. This is how I trade, and it always works. Whether any news comes out, so any news that comes, it will favor you and you will it will reach your target. And this is over, I think, 200 pips. Let me measure it. You will see how I'll pick my entry on the 15-minute time frame. This is 203 pips. You see how I pick my entry on the 15-minute time frame. Now, price has broken the structure in this candle. This was a Monday, right? And it gave us a what? A fair value gap. Let's mark the fair value gap. This is the fair value gap. So this was a Monday. So I'll wait for market to face into the fair value gap to what? To sell. Very simple. But I don't like using the fair value gap in cases like this. What I like to use is order block. So let us mark our order block. Price tap into this liquidity, into this liquidity in this blue candle, and then broke structure here. This is the last blue candle before this reversal. This blue candle is going to tap into our liquidity. So it makes the open of this blue candle my what? My order block. Very simple and very easy. So I'll wait for market to come back into this order block to make my entry. Very simple. We can go straight into the 15-minute time frame to pick our entry, or we can go straight into the 4-hour time frame. But let me go straight into the 4-hour time frame to pick. So also look at it. So on the 4-hour time frame, this is the whole B. You can see everything just keep transposing itself. This is the whole B. So market came up and hit the whole B. Now people that don't really know how to reach out to say that, oh, Cesar has been taking BOS here, it has been broken. Like Cesar has been taking, they have a break of market structure to go bullish. Okay, came back to this favor, let me buy. No, this 4-hour break of market structure cannot override what the monthly time frame is saying. And what the monthly time frame is saying is sell, which has been confirmed on the daily time frame by that break of market structure. So what I'm looking for is for price to go up into that daily OB that we marked, and for it to give us our entry to sell, and then we'll target this lovely guy here. So let me just move straight into the trading time frame. And so you see everything is all clear and beautiful. Let me show you. This trade made me very happy because it's printed exactly how I wanted it at all. And I was just so glad. Pick the entry, and I think I'll show my friend. This trade gave me 26 pips. Sorry, 26 alpha. You know what that means? Alright, so this is it. Okay, so let me see what's from here. So you can look at it now. You can see it now. market tapped into the, don't forget this blue line is our what? Is our daily OB after we've seen a break of market structure. Now price tapped into this daily OB in this candle, but it didn't give us any break of market structure. You see, this low was not broken. It kept what? Pumping higher, respecting all these lows, right? It came down to this fair value gap. It gets pumping higher, respecting all these lows. But when it's pumped higher here, it broke down, disregarding this swing low, giving us what? A break of market structure. Can we see? After it has given us a break of market structure on daily time frame, right? It bumped into the daily OB here, daily bearish OB here. Are you with me? So it gets pumping higher, but I might keep saying that if I see any break of market structure that is bearish on 15-minute time frame, I will sell the fucking shit. And the break of structure on 15-minute happens here. Market keeps pumping. Don't forget that when it enters into the zone of this daily bearish OB, it respected all these swing lows. It didn't break any one of them. It kept making new high, higher, higher, then higher, then rushed down, broke this low. Right? So immediately market came down and broke this low. Now we have to ask ourselves, now from this high to this low, is there a fair value gap? Yes, there are two fair value gaps. And this is the first one, right? And this is the second one, right? When we look at it, this first fair value gap has been entered, like the market has used it. But this one is still fresh. So next market is coming inside this OB, I will sell it. Though my stop loss will still be on top here because it might want to bump a little bit into this fair value gap before it starts selling. So I came here, sell, put your TP here. And here is live. Enter here, sell, put your TP here. Very smooth. And where can you target for your TP? You can target this that previous month sell side that we picked. Where is it? You can target this swing low here, but I actually did not need it. Do you understand? I just targeted last week high, last week low. But the final destination is this line. And though it has not reached here yet, but trust me, it's still coming for this low. It's coming here to come and bump here. So you can see if I had held it, I would have made over $120. Yeah. But I don't really like holding. So I just sold here and I TP'd here, which was okay, I TP'd here, yes, I TP'd here, which was my previous last week low. Sold and TP'd here. It was okay, smooth, clean. Though throughout the week, I kept using that same mind because I know this is our last bus stop. So I kept using that idea to keep looking for short. I think there's another opportunity to short here again, sell here. Can see it? Sell, same thing, keep going down up. So these are a trade, and I will close to open our charts for any pair and try to start analyzing from the multi-time frame. It will take time before you can have an hand of it, before you can understand, like before you can master it, but it's worth the time. Let me just give us a little nugget. What will happen when we open next week is this. Price will bump into this other block. If you respect this OB, it come and take this outside. I just gave us a signal here to go up to this fair value gap. If you respect this OB, come for this outside. So what we look for is that when price enters this fair value gap and it bumps into the open of this blue candle, which is blue bearish candle, look for a break of market on 15-minute time frame and the fair value gap. Then sell TPA. Very simple, very nice. So open your chart. This thing I just said here. Go to gold, go to GPUSD, check everywhere. They are going to see it there. So if I want us to work on it, back test it, master it, and make the best out of it. So until we see you again next time, good day and good trading.